very good morning to you guys. Hope you're doing well. So there's worth noting about the risk calculation is that we're really close to flipping to risk off at the big picture, and that tells us the retail herd sentiment on indices. So if they're buying indices, that would normally be a bearish indication, and what we're seeing is that they are buying over time, and maybe by tomorrow we could be risk off, because they're net long basically on an average across the week. So normally they're conditioned to be bearish, and if they're conditioned to be buying, which they have been, then it can be quite a scary, ominous indication. Now the thing of note is the technical risk calc. We have come a long way off where we were Friday. We were really bearish, and Friday we were 5 out of 100, and now we're 53, so we're beyond the midpoint, we're above 50. So for me, that's technically risk on. Sentimentally, we're just clinging on at the precipice of our QDB risk calculation. Now, another additional caveat is that we have crossed into net positive, and we see a hell of a lot of wobble. And what normally happens is it doesn't tend to last very long. It might last for a couple of days, perhaps a few days. And then the retail guys will then be conditioned to sell again, and then that'll be it, and then we can really pump on indices. So the reason for it is that if they go long on risk, then they'll be instructed not to by price action and news events. So I expect things to get a little bit heavy if we go into net positive, especially if the technical risk calculation dumps as well, and then we'll fall, and then they'll be like, oh, why was I bullish? That's so stupid. I need to get out, I need to sell it, and then that action en masse then cause things to pump. Right, so that's the little logic there. I want to talk about the robot quickly, and what's really awesome is that we're now flat for the first time in I think 68 days of testing, so it's working really well. We had a bit of a debate about the stop loss and trading stop yesterday, so we're going to put that in on the weekend. Pound USD was the only rogue trade currency pair that we had since the new approach, and what had happened is that we'd got stopped out here on this move here twice. So we had two bad trades out of out of quite a few. Let's have a look at the custom period. When did we start it? Well, let's do the last 3 days, say. And yes, we had a bad GU trade. Yeah, bad GU and bad GU. So we had two bad trades out of the whole lot, and we've got quite a nice result. However, those two bad trades, obviously an issue because the size, the damage, it causes because of the the loss is certainly greater than the profit in that situation. So in this particular instance, we needed a wider stop, but if we have wider stops, then there's a danger of them pushing price, then taking out really wide stop, and then we're doing a lot more damage. So what we'll be doing on the weekend, we're going to reduce the stop loss, so we won't ever have like a large loss. When I say large loss, £8 isn't really a large loss, but we want to be looking at things in relative terms. So for example, say if our average win is £1, an £8 loss is actually quite poor. So we can be looking at trimming the stop loss distance, and then if it doesn't work at all next week, then we'll go back to this, and then this approach of how we're doing it. So it's worth mentioning the trading stop. So this is the trading stop settings, and that's what we got currently. So what we'll do, we'll change the stop loss distance, and we'll increase the trading stop, and then if it doesn't result in a positive week next week, we'll go back to this, because this week is going quite well. And but obviously we want to try and eliminate that £8 loss. It's not ideal, But like I say, if we had a wider stop, we might have been okay. But then therein lies the risk of it price pumping and taking out our wide stop, which isn't good. We want to have our losses smaller if our average wins are going to be about this amount. So we're now currently flat, which is really good. Absolutely no drawdown whatsoever. We're not incurring any negative swap or anything like that. No charges or commission. It's just sitting waiting for the next trade. The next trade's going to be Aussie USD, by the way, and we'll just have to see how we go at that. If you want to know which way, if it's going to be a buy or a sell, you have to join us on Discord. Oh, I'm back there again, and we'll talk about the indices and gold. But I think you get good value in the Discord because you've got a load of trade setups. You've got this robot. We've got a new forum as well, which we've got an off-topic forum where we can talk about games and films and music and stuff like that. It should be quite a good community to join, and you can ask me questions and ask us questions as well. We've got a public chat. We've got an open forum, and we've got like private chat as well for members only. So it's definitely a good community. There's gold, but we made the buy so we can create a crossover box, demand rectangle. Where are we? Yeah, it's basically just there, isn't it? I think we'll just map it there. So 1898 to 1901 maybe. There's like a support. The reason for it is that they'd sold, so therefore it would be unusual for a price to come down because these guys wouldn't normally be getting paid. They'd normally be wrong. They sell it, so they have to be, price has to come up, right? That's how it works. It's really cruel, but very simple, and that's the key. It's very simple. So you're looking for the crossover, looking for your exit, and then you're looking to try and get a good R, which is your risk multiple. So if you're prepared to risk $5, then you get $10. That's a 2R, so you're getting twice your risk reward. So 2R is okay, 3R is much better, obviously. So the tighter your stop, the better risk reward you'll have. So there's gold, and that's the QDB entry and exit system. So you're looking for a crossover, stipulating your exit, and then you're kind of hoping that it's going to pump, because normally these guys should be wrong and they shouldn't be getting paid. So up we come. It's really horrible, but that's how it is. That's trading. But you need to have these tools, and so you can see how it works. That's kind of annoying. They're going long, which isn't great. They're probably looking at this and thinking, oh, this looks quite bullish. So this is a bit of an ominous sign, because remember, we don't want them to be buying. If they're buying, we're going to go risk off tomorrow on our calculations. So this is not so good. Be careful there. Yeah, we'll have to wait 50 minutes to see what happens. It might mean a little bit of a payday scenario here for those guys, but that would be a little bit of a warning sign. Hopefully the American indices aren't doing the same. If they are, then that's going to be a bit of an omen. No, they're selling. That's good. I think they're just going long DAX. Not quite sure why, but that's fine. We can draw a box here, and they went long up here, so they got punished. But we can draw a box, can't we? We just got a lot of congestion here, and we need to break above this box really. So we can draw another box, but it'll just get messy, so I'll leave it. But basically, they went long at that candle, so we fell quite heavily. 1, 2, 3, 4, 5, 6 hours of selling because it went long. All right. Could probably just draw a box quickly. This is going to look a bit messy, but that's what happened. They went long, so they got punished, right? So probably it's going to have to happen with DAX. I'm not sure. So there's quite a choppy sentiment there. It's not ideal. We want to break that congestion and that traffic. Likewise, S&P. And that'll be today's video. And we'll wrap up. Okay, so that's fine. Just about. Yeah, they need to sell it. We can create a box here potentially, but it's the thinnest box ever. And then that's it. So we'll wrap up now. We've got some US PMIs today, and I think the durable goods are tomorrow. So that's going to be a fairly big data release. It's a very thin box. So I mean, you're looking for a risk to reward perspective. If your stop's going to be there, you're going to get a good R. You'll get a good risk to reward using that crossover logic. So be careful. Remember to do your own due diligence, do your own research. If you see a signal in Discord, do your, look at your chart and think, well, does it look like a buy? If it looks like a sell, don't take it. If you're not sure at all, you could ask me, and it might even be better to sometimes just to sit on your hands and monitor if you're not sure. That's a good approach that I've had, is that I've been looking at some trade setups and I'm not 100% convinced, so I don't take them, and it worked out good. Had I taken it, it would have resulted in a loss. So it's all a case of just being patient, letting the trade come to you, and then just trading it. And also don't forget your orders as well. If you place orders, it doesn't really matter if you don't get filled, but if you get filled, then that's good, because you've allowed price to come to you. You haven't chased price, you've allowed price to get to your entry point, and by therefore you would have stipulated your SL and TP, and then you're not really chasing the market, you're not really gambling, you're trading by placing orders. So little tip there. Keep an eye on this. We might continue to pump. Technically we might go risk off on the sentiment tomorrow, but if we do, we need to keep an eye on that. That's really important. So we go red here, that's going to be absolutely key as we go into the Jackson Hole Powell speech tomorrow, Friday. See you later.